In this particular session, we are going to have an overview of the topic in our material. So, up to which extent we just completed, we will see that. So, the point is here, the first topic is with respect to what is meant by the word tax. Generally, the government provides many kinds of services to each resident people and in the same way to the non-residents. That means whether they may be resident or non-resident, generally all these people will need infrastructure, security within India and defense. All these things are required with respect to the people who are there in India. So government provide all these basic facilities. So in order to fund these basic facilities, what is the thing that is required? The taxes or the primary source of revenue for these fundings. The first question is tax here. So see, in providing these facilities, government incurs huge amount of expenditure, and to meet those expenditure, government need funds. There is no specific source from which the government can generate the revenue. We can say that tax is a fee that is charged by the government for the services provided by them as usual. The next one is what is meant by the word tax. Tax is a compulsory recovery. It is not optional under the force of an act by the government authorities. Okay, the days of compulsory extraction of money by the public authority for public purpose. Simply, the origin of tax is there in India only after independence, or before independence also the concept of tax is there. Is there any evidence that before independence also the word tax is there? Kautilya's Ardhasastra is the best evidence for what we can say. There was a tax even before independence also, when there were kingdoms and the kings like me. So all these people were there. At that time also, there is a concept that is known as taxma. Okay, the point is here, in olden days, the king is compared to the sun. Just like the sun, which actually absorbs the water from the earth and whereas give it in the form of the rain to the needy people, the king is also will collect the money from the rich people and will distribute the money to the poor people. Generally, the purpose of tax is itself to abolish the discrimination between rich and the poor. That's why rich are taxed more. So the concept of tax is there even before independence also. The next word is cess. What is meant by the word cess, ma? What is that? Generally, earmark means specific purpose. That means the purpose of those funds must be specific. That means whatever the amount you collect in the name of the cess, those amounts must be utilized for the purpose of that particular thing. Education says, health says, infrastructure says, Swachh Bharat says, Krishi Kalyan says, like that. All these things are levied for a particular purpose. Next one, interest. What is the difference between interest and penalty, ma? Generally, interest is compensatory in nature, penalty is penal in nature. That means compensatory in nature means generally it can't be an intentional one. Generally, if it happens unintentionally also, what is the thing that is levied by the government is known as interest. It is a compensatory in nature. That means government don't want to punish the other party. What the government thought is, okay, you are making delayed payment. That's why I suffered the loss. Please compensate the loss. In that nature, what the government will levy, it is known as interest. And if you have done something wrong, and as a punishment, what is the thing that is levied? It is known as penalty. That is the difference between interest and the penalty. You may come across these words later on, whether it may be your income tax or it may be our GST, interest at the rate of 18%. Even CMA Inter also it is there now, interest at the rate of 18% you need to pay, and penalty will be levied. Penalties is not in your syllabus in CMA Inter, it will be there in CMA Final. So that's why interest is compensatory in nature. That means government don't want to punish you, but it simply wants to, what we can say, whatever the loss that department or the government suffers, so based on that particular loss, they will ask for you the compensation. अरे यार तूने नहीं पे किया ना within the due date, that's why I suffered this loss. Please actually compensate that one. That is the thing what the government will ask you with respect to interest. But whereas with respect to penalty, government will have a thought that you have done the wrong thing. It should not be done by you. You just violated the law. And you don't expect it from you. I just want to punish you now. For that sake, you are liable to pay penalty. That's why interest is compensatory in nature, and whereas this penalty is penal action in nature. Okay, ma'am. This is the difference between interest and penalty. And the next one is, okay, Naam ke vaste, I think Independence Day, Republic Day, generally there is a difference between them now. What is the difference between Independence Day and Republic Day? What is the Independence Day? The day we got the independence. What is meant by Republic Day? The day when our constitution came into enforcement. Okay, just namesake, we just gave that one. And this point, topic 3, we need to discuss still. So topic 3 is still pending, ma. Okay, now topic 4, types of taxes. We know the types of taxes now, DT and IDT. With respect to DT, income tax, previously wealth tax was there, now it was abolished, and this is IDT actually. Okay. IDT, tax on the goods like excise duty, customs duty, CST, VAT, and service tax. These are actually levied by these indirect taxes. And apart from that, topic 5 we will discuss now. Topic 6 we had a discussion. Who is the ultimate authority for tax collection in India? Ministry of Finance. Under Ministry of Finance, Department of Revenue will be there. Under Department of Revenue, 2 boards will be there. One is CBDT and second one is CBIC. What is the full form of CBDT, ma? Central Board of Direct Taxes. What is CBIC, ma? Central Board of Indirect Taxes and Customs. The CBIC will divide the total country into zones. Zones into commissionerates. Commissionerates into divisions. Divisions into ranges. Okay. And ranges into sectors. And who is the head for this zones? Chief Commissioner is the head for zones. And Commissioner is the head for commissionerates. And Additional Commissioner or Joint Commissioner is the head for divisions. And Superintendent, this fellow is Superintendent. Superintendent is the head for ranges, and Assistant Commissioner or Deputy Commissioner will be in between divisions and ranges. And below him is sector. For the sectors, inspectors like that will be there. Okay. All these people are known as adjudicating authorities. All these people are known as adjudicating authorities. Chief Commissioner, Commissioner, Joint Commissioner, Assistant Commissioner, Deputy Commissioner, Superintendent, Inspectors. All these people are assessing officers that are known as adjudicating authority. And this fellow is known as appellant authority. Commissioner appeals is known as appellant authority. Sir, what is the difference between adjudicating authority and appellate authority? Anybody knows what is meant by the word adjudication? Adjudication proceedings. Adjudication. Adjudicating authority and appellant authority. Two words are there. Chief Commissioner, Commissioner, Joint Commissioner, Assistant Commissioner, Deputy Commissioner, Superintendent, all these people will come under the word adjudicating authority. And Commissioner appeals, another people will also be there. Appellant Tribunal, High Court, Supreme Court, all these people will come under appellant authority. Commissioner appeals, Appellant Tribunal, High Court, Supreme Court, all these people comes under the word appellant authority. Now you can tell me what is the difference between adjudicating authority and appellant authority? Anyone? Adjudication means dealing with the taxpayers. Let's say issuing show cause notices to them. You just forgot to pay the GST, please pay it. Those people will issue the notice. And after that, after receiving your reply, then he will ask you to pay that amount along with interest. Sometimes penalty is also levied. All these six comes under adjudicating proceedings. The authority, the officers who will do this adjudication is known as adjudicating authority. If the order passed by the adjudicating authority is not acceptable to us, then we will go to appeal. Then to whom we will appeal? Those people are known as appellant authority. Okay, got the point, ma? Let's say generally departmental officers will issue the show cause notice if at all the amount is not paid, if at all you are required to take the registration, but you did not take it. In those cases, department will issue a notice. Please register kar dena, tumhara organization ko. So they will ask for that. If you done that, that is okay. Otherwise, they will forcefully register you. And after that, they will ask you to pay the GST, interest, penalty, all these things. For that, the order will be issued, demand order, adjudicating order. If at all you are okay with that, you will pay that. If at all you are not okay with that, you will go to appeal. To whom you go for appeal, those people are known as appellant authority. Like Commissioner appeals, Appellant Tribunal, High Court, Supreme Court. All these people will come under the word appellant authority. So adjudication means dealing with the taxpayer. The person who deals with GST registered persons is known as adjudicating authority. The persons who deals with GST registered persons generally is known as adjudicating authority. If the order passed by the adjudicating authority is not acceptable, if the order passed by the adjudicating authority is not acceptable, then the SSC will go to somebody, that somebody is known as appellant authority. Example, Commissioner appeals, Appellant Tribunal, High Court, Supreme Court. These people are treated as appellant authority, and the persons who are the departmental officers are known as adjudicating authority. That is a point you should remember. Okay, ma? This is topic 6. And after that, we completed topic 7 also. Difference between DT and IDT. With incidence and impact on the same person, that is tax burden will not be shifted. Impact on one head and incidence on another head. That means tax burden can be shifted with respect to indirect taxes. It is levied on income-based taxes, supply-based taxes, and person to person tax rate will differ. That's why progressive in nature they are called as, and they are not differing from person to person rate of taxes. That's why regressive nature. Entire revenue will go to center, and indirect taxes, some are levied by the central and some are levied by state also. Okay, and previous year income assessed in assessment year There is no previous year and assessment year concept in our indirect taxes. The board is CBDT, the board is CBIC, progressive, regressive. Instead of all these four, I just told you simple four. First one, tax burden cannot be shifted. Tax burden can be shifted. Second one, progressive nature, regressive nature. Third one, levied on persons, levied on goods and services. Collection cost is high with respect to direct taxes. Collection cost is low with respect to indirect taxes. These four, if you remember, that is more than sufficient. Okay. On topic 8, this one also we discuss. GST is a mixture of multiple point taxation system and the last point taxation system with a system of set off of the tax on earlier purchases. GST is levied on both goods or services. The GST is a value added tax on the supply of the goods or service. Simply, what is the summary of point number 1, ma? GST is a value added tax. That means in every process, what will be the value addition? On that value addition only, we will pay the GST. We discussed the example also for this. Manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, and retailer to consumer. This process is known as supply chain. Okay. So the tax burden will be shifted from one person to another until the goods reach the hands of consumer. Second one. GST is a consumption tax because it is ultimately borne by the final consumer. The tax paid by the supplier is passed on to the recipient. That's why it is called as destination based tax. GST is a destination based tax. That is the second point. First point, GST is a value added tax. Second one, GST is a destination based tax. Sir, what is meant by the word destination? The place where the goods are ultimately consumed. That place will be the destination. That particular state government will get the revenue. Already we know third point also. GST is not charged on the supplier, but is charged on the ultimate consumer who bears the entire tax burden. Therefore, the nature of GST is indirect tax since the burden is passed on to the ultimate customer. That's saying a special point here. GST is indirect tax. Important point. Okay. GST is a indirect tax because tax burden will be shifted from supplier to recipient, consumer. Next one. Every supplier pays and collects GST. A GST would be paid by the producer of raw material all the way through the retailer at the end of the chain of production and distribution till the retailers. This means they are explaining the supply chain there. So manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, and retailer to consumer. Until the goods reach the hands of the consumer, tax burden will be shifted from one person to another person. And GST is truly anti-cascading. The tax that is paid on inward supply on the both goods and services is allowed to be set off from the tax on outward supplies. Therefore, input tax is not treated as part of cost. If tax paid on input is not treated as a part of cost, it shall not create cascading effect. What is this point, last one? It is talking about ITC. Let's say already we discussed at this point, but we need to do the same homework in a different point of view. Manufacturer, distributor, same example I am taking here. So manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, and retailer to consumer. Stage 1, stage 2, stage 3, stage 4. 1000 rupees, 1400, 2000, 3000. Let us assume that for the sake of easy computation, GST rate as 10%. Okay. Now the point is here. So first, what is in stage 1? With respect to stage 1, what is output tax payable? Okay, just I will do one thing. Just wait. Just put in this manner. Just let it put it. Okay. Particulars. Stage 1, stage 2, stage 3, stage 4. Output tax payable minus input tax paid. Okay. In stage 1, what is the output tax payable, ma? 100, because 1000 into 10%, it will be, it will be 100. It will be 100. Let us assume that for this raw material purchased is 500 rupees. On that 50 rupees was input tax that was paid. Based on that, now what is the amount we will pay? 50. Now stage 2, what is output tax payable? 140. What is input tax, ma? Previous stage output tax will be the present stage input tax. That is 100. Now it is 40. Okay, fine. Stage 3, 200 is output tax payable. ITC, ma'am? It will be 140. Total, it will be 60. Stage 4, output tax payable, 300. Input tax, 200. So, in every stage, we will pay GST on value addition is the word that we use. In every stage, what is the tax we paid in the current stage can be used to pay tax on the next stage. This is called input tax. If at all input tax credit is allowed, what will happen, ma? That amount will not be a part of your cost. Let's say item value is some 100 rupees. Tax is 10. Okay. If ITC is allowed on this 10 rupees, now what is the cost, ma? 100 only. 100 plus 10. Okay, 100 is the value, 10 rupees is the tax. In that case, if ITC is allowed on the 10 rupees, then this 100 will be the cost of the raw material. Then there will not be any cascading effect. If at all no ITC is allowed, then what is the total cost? 110. Let us assume that 40 rupees is the profit margin and general expenses. Now the sale price is 150. On this 150, we are calculating the tax. That means in this 10 rupees tax was already included. Na? Tax on tax. It may lead to cascading effect. That means if ITC is allowed, that amount will not be added to the cost. Therefore, there will not be any cascading effect. If ITC is not allowed, then the tax portion will be added to the cost. Ultimately, it is included in the sale price. It may lead to cascading effect. That is the sixth point is saying what? Okay, ma? That is what the sixth point is saying to us. So, it is truly anti-cascading. The tax paid on inward supplies, that means on the inputs, is allowed to be set off from outward supplies. Okay, therefore, input tax is not treated as part of the cost. If tax paid on the input is not treated as part of the cost, then it shall not create cascading effect. So, if ITC is allowed, the tax will not be added to the cost. In that case, no cascading effect will be there. If at all ITC is not allowed, then the tax element will be added to the cost. Ultimately, it is included in the sale price. It may lead to cascading then. That is the sixth point. Okay, ma'am? So the next one is need of GST. Already deficiency in the existing value addition taxation system is the need of GST. There is a cascading effect. Generally, the business people, I already told you, will be divided into three categories: manufacturer, dealer, and service provider. So what is the output tax of manufacturer? For manufacturing the goods, excise duty. For selling the goods, VAT. What is the ITC that is available to him? What is the ITC? Because what are the items the manufacturer will purchase? Inputs, raw materials. He will receive some input services and some capital goods. All these things he purchases. On the inputs, that means on the goods, he will pay excise duty and VAT. On the services, he will pay service tax. So what is the previous rule, ma? Central taxes can be used to pay central taxes, and state taxes can be used to pay state taxes only. So with respect to central government, what in the output tax, what is the central government tax, ma? In the output tax payable, what is the central government tax? It is there in the brackets itself. Excise duty. This is output tax payable. In the output tax payable, what is the central government levy? Excise duty. This excise duty will be set off with this excise duty and service tax. Both are central items. And VAT is a state item. It is going to set off with VAT. That's why there is no cascading effect with respect to manufacturer even before implementation of GST. Because he is able to set off each and every input tax. That's why he suffered no cascading effect even before implementation of GST also. Now come to the dealer. Let's take the example of car showroom. With respect to car showroom, what is the output tax payable? Because he will not undertake any manufacturing activity. What the trader will do, car showroom will do, he will simply resell the item. When you are reselling, what is the thing you need to pay? VAT. So the output tax payable is VAT. And in input taxes, excise duty was there because he is purchasing the car. At the time of purchasing the car, excise duty and VAT will be paid. And he will give some advertisement now, like Diwali offer. As a Diwali offer, if you purchase a car, keychain is free. Something like that, he will give some advertisement. Yes or no? So definitely in those cases, what is the position, ma? Definitely on that advertisement expenditure he will incur, na? Definitely on that service tax is going to be paid, na? Yes. But here, what is the general rule? Central taxes can be used to pay central taxes. State taxes can be used to pay state taxes only. What is a state levy or a central levy? State levy. In the input taxes, what is the state levy? VAT. VAT will be used to set off VAT. But excise duty and service tax, we are unable to set off. So in the input tax, excise duty and service tax, we are unable to set off. That's why there is a cascading effect to the dealer because of excise duty and service tax. Okay, next one. The service provider. Let's say Masterminds. Service provider, the best example is Masterminds. Masterminds will do the service now. Service is different from charity. Service is a business activity. Okay, what the Masterminds will do? Coaching service. What the banker will do? Financial service. So service is different from charity. Here MM is doing the coaching service, not the charity. Okay, so what the output tax of MM? Service tax. And MM also requires these cameras, projectors, and all these things. What are the other things MM requires? Benches, furniture. Faculty also required. First, students are required, but students are customers. Students are the output actually. They are not the input. You comes under output only. You will not be treated as the input. Okay, so all these items, cameras on the excise duty, VAT will be paid, and for audit service, Masterminds will also give some advertisements on TV9 or something like that. What is the TV? ETV also. Okay. ETV were sponsors. Which program? D dance program. is a sponsor. Okay, but backside it will not be there. It is a backside logo like that. It is there. In that case, sponsor, na. If any program the back logos or something are there, then definitely is also sponsor in that. So in D program, is a sponsor. Okay. is not sponsoring Sumama, that program. Fine. Okay. So on that particular advertisement, so definitely what is the point, ma? Service tax is also will be paid. So what is the output tax of there? Service tax. What is the output tax of Service tax. In that case, what is the position, ma? Is it a state levy or a central levy? State levy or central levy? Central levy. In this excise duty, service tax or central, they are used to set off this. What about the VAT? Are we able to set off VAT with service tax? No, because VAT is a state levy, service tax is a central levy. Therefore, we are unable to set off the VAT. In that case also, there is a cascading effect because of VAT. So in order to overcome these difficulties, GST is to be expected the cure of our indirect regime, because no cascading effect due to single taxable event. See this, whether it's a manufacturer, dealer or a service provider. What is output tax liability? GST. What is input tax liability? GST. Oh, sorry. Here, nil. By mistake, copy paste. This was. Okay, what is output tax liability of manufacturer? GST. What is input tax liability of manufacturer? GST. Whether it is a manufacturer, dealer, service provider. What is his output tax liability, ma? GST. What is his ITC, ma? GST. Thereby, there is no cascading effect, at least on paper. It will be mitigated to the maximum possible extent. That's it for this session. We will see the remaining ones in the next class.